If you are a retired US citizen who wants to move outside of the US and wants to live there, but you're wondering, what am I going to do about taxes now? In this video, I'm going to cover what benefits you are still eligible for as a US retiree living overseas. Hi, my name is Sadifa. I have been with Nomad Capitalist for quite a while now, creating strategies for our clients and making sure they go where they are treated best. Today, we're going to talk about U.S. taxes for retirees, for U.S. retirees residing overseas. Now, you might be wondering, okay, I'm a U.S. citizen, I'm retired now. Can I still get Social Security? What would that look like? Where can I move? Are there any advantages to that? Today's video is going to tell you all about these details. Social Security benefits are still available to U.S. citizens, retirees, even if they move abroad, although there are some limitations to certain countries, which I'll get to in a bit. In order to still be eligible for Social Security, you need to follow a few steps, or you need to make sure that some requirements are met. So this will all depend on your citizenship, residency status, and whether the U.S. has an agreement with the country that you are moving to. So you should be very careful when picking the country that you're gonna relocate to in order to still enjoy the Social Security benefits that you contributed to. So firstly, to be eligible for Social Security benefits, you need to have earned about 40 quarters of coverage or credit, which is equivalent to about 10 years of working in the U.S. and contributing to the Social Security. Although there are some sanctions in place that you should be very careful of, as I've mentioned in the beginning of the video, there are certain countries that if you are a resident of, you cannot receive Social Security benefits. Some of those countries are North Korea and also Cuba. So if you are a resident of Cuba or North Korea, you cannot receive these benefits. Also, typically payments are withheld from if you're residing in Azerbaijan, Kazakhstan, Belarus, Ukraine as well. So if you are a resident of any of these countries that I've mentioned, the Social Security benefits will only be applicable and you can only receive them if you relocate. So if you cancel your residency in one of these countries and relocate to a country where the US can actually send you those benefits. It is important to note one thing. On the basis of U.S. expat taxation, Social Security benefits are actually taxable. So that's an important thing to keep in mind when considering all of this. Apart from being treated as taxable income in the U.S., if you are moving to a country where the U.S. doesn't have a tax treaty with, then you are looking at double taxation. Because here, if you are moving to a country where there's a treaty with the U.S., the treaty acts as a blockage. So you are not taxed in both the U.S. and that other country. But if there's no treaty to block the double taxation, you might actually end up paying taxes both in the U.S. and also in that country of residence, depending on where it is. A very common question is, well, do these payments qualify for the foreign earned income exclusion? And unfortunately not, because they're not foreign earned. So you cannot count these Social Security payments towards that deduction for foreign income exclusion. There are some U.S. states, about 11 of them, that actually tax either partially or all of the Social Security benefits. Some of them are Vermont, Kansas, Minnesota, Utah, New Mexico, amongst some others. So there are 11 in total that would tax Social Security benefits, either fully or partially. In Colorado, though, as of recently, Colorado will tax it, but it will allow retirees that are over 65 to fully deduct the Social Security payment. So if you are over 65 and you can actually deduct them and not be taxable, unlike some other states which don't have any deduction rules. Now, there can be some domestic planning. So if you move to a state in the US where there is no state income tax, you can actually kind of structure it where you are taxed a bit more beneficially, let's say. So Florida is one of those states. So if you move to Florida, it could be a bit more beneficial for you. Although it is very important and very crucial to check with your own state taxation requirements, especially for Social Security benefits, if that's what you are looking for, and make sure that you are aligned with each state's rules. Now, apart from some domestic planning, obviously, when you move outside of the US, if you reside overseas, again, like I've mentioned, it's very important to make sure that you're either relocating to a tax favorable jurisdiction, as in when you have no taxation, or that you are relocating to a country that has a tax treaty with the US. This will help you really organize a bit better and not have to pay more tax than what you would in the US. If you found this information useful, please don't forget to subscribe to our YouTube channel and also like this video. And if you have any programs, any topics that you want to learn more about, don't forget to comment them on this video so we can take them into account for future reference.